Your money is losing hundreds or even thousands of dollars in value every single year. And most seasonal workers have no idea it's happening because they're using the wrong type of accounts. If you're a roofer or any seasonal worker keeping your off-season savings in a regular checking account earning 0.01 interest, you're literally throwing money away. But here's what's even worse. Most seasonal workers are using bank accounts that are completely wrong for their situation. What's up, Roof Money Pros? I'm Mike with Roof Money Pro, and my mission is to help roofing professionals like you maximize your careers and build wealth that actually lasts. During my 3 years in roofing sales, I watched guys save up $50,000 for off-season and leave it sitting in checking accounts where it earned basically nothing. Meanwhile, smart seasonal workers are earning $1,000, $2,000, or even $3,000 per year just by putting their money in the right accounts. Today, I'm going to show you the best bank accounts for seasonal workers, how to maximize your interest earnings, and the banking strategies that can add thousands to your wealth over time. If you're ready to make your money work as hard as you do, hit that subscribe button because we're about to turn your banking setup into a wealth building machine. Let's walk through a scenario where a contractor made a classic mistake that cost him serious money. Imagine a roofer who had been disciplined about saving. They built up $45,000 for their off-season fund, but this contractor kept all that money in their regular checking account at their local bank where they'd banked for years. Their checking account paid 0.01%. On $45,000, that's about $4.50 per year. Not $4.50 per month, $4.50 for the entire year. They were essentially letting the bank use their money for free. When shown how to move that $45,000 into a high-yield savings account paying 4.5% interest, suddenly they were earning over $2,000 per year just for keeping their money in a different account. Same money, same bank balance, but $2,000 more in their pocket. That $2,000 might not sound life-changing, but compound that over 10 years and this contractor would be looking at an extra $20,000 just from choosing the right account, for doing absolutely nothing different except moving their money to a better account. Most seasonal workers, such as roofers, make this very same mistake each year. They stick with traditional brick and mortar banks because that's what they always used. But traditional banks are actually the worst choice for people who save large amounts of money. Traditional banks pay almost nothing in interest because they don't have to compete. They've got physical location, lots of overhead, and they know most people won't switch banks over a few percentage points of interest. But seasonal workers aren't most people. You're saving $20,000, $40,000, $60,000 or more during the busy season. On those amounts, a few percentage points of interest becomes real money that can change your financial future. If you have $80,000 spread across 3 different accounts at your local bank, then you're earning maybe $40 per year in interest across all 3 accounts combined. By moving your money into high yield accounts, you could start earning over $3,600 per year in interest. Then you'd be making more money from interest than some people make from part-time jobs, just by choosing better bank accounts. Let's talk about high-yield savings accounts and why they're perfect for seasonal workers. High-yield accounts are typically offered by online banks that don't have the overhead of physical branches. They pass those savings on to customers in the form of higher interest rates. Right now, the best high-yield savings accounts are paying between 4 and 5% annual interest. That means if you keep $50,000 in a high yield account, you're earning $2,000 to $2,500 per year just in interest. But here's what makes this perfect for seasonal workers. You can access your money whenever you need it. It's not locked up like a CD or investment account. You can transfer money out during off-season when you need it for expenses. Let's say you save $65,000 during your busy season and put it all in a high yield account paying 4.2%. Over a 5-month off-season, you'll earn almost $1,100 in interest. That interest money can help offset or possibly cover your heating bills for the entire winter. Think of it like you're literally getting paid to save money for the off-season. Now your disciplined savings habits aren't just protecting you from winter stress, they're actively making you money. Let me break down the best high-yield savings accounts that are perfect for seasonal workers right now. These rates change frequently, so always check current rates before opening accounts. Marcus by Goldman Sachs consistently offers some of the highest rates with no minimum balance and no monthly fees. They're currently paying around 4.4 to 4.5 APY, and their customer service is solid. Ally Bank Online Savings is another strong option. usually paying around 4.2 to 4.3 APY. Ally has great mobile apps and makes it easy to transfer money between accounts. They also offer good customer support. American Express Personal Savings is the one that I use and pays competitive rates around 4.3 to 4.4% APY. If you already have other accounts with Amex, this can be a convenient option with easy integration. Capital One 360 Performance Savings usually offers rates around 4.2 to 4.3% APY, with no minimum balance requirements. They have good online tools and mobile banking features. Discover Online Savings often pays around 4.1 to 4.2% APY and offers good customer service with 24/7 phone support, which can be helpful for people working irregular hours. It might sound counterintuitive, but don't get wrapped up chasing rates. The key is that all of these accounts pay 100 to 200 times more interest than traditional bank accounts. We're talking about earning $2,000 per year instead of $20 per year on the same balance. Find the one you like and take action. Now here's an advanced strategy that really smart seasonal workers use. Multiple high-yield accounts for different purposes. Instead of keeping all your money in one account, you spread it across several accounts based on what the money is for. Here's how you can make this system work for you. You might have 5 different high-yield accounts: off-season survival fund, business overhead fund, tax payment fund, equipment replacement fund, and opportunity fund. Each account would serve a specific purpose, helping to avoid spending money that was earmarked for something else. Plus, they'd be earning 4% plus interest on all their savings instead of just part of it. The psychological benefit is huge too. When tax money is in a separate account earning interest, there's no temptation to spend it on something else. The money has a clear purpose and is actively growing while waiting to be used. Money market accounts are another option that seasonal workers should consider. They typically pay higher interest than regular savings accounts, but lower than the best high-yield accounts. However, they often come with check writing privileges and debit cards. For seasonal workers, money market accounts can be perfect for your emergency fund, or money you might need to access quickly. You're earning decent interest, but you have more flexibility than with pure savings accounts. Some of the best money market accounts right now are paying around 3.5 to 4% APY. That's still way better than traditional bank accounts, and the added convenience might be worth the slightly lower rate for some of your money. You could keep your main off-season fund in a high-yield savings account, but keep about $10,000 in a money market account for unexpected expenses. That way, you're earning good interest on both accounts, but have easy access to emergency money if the truck broke down or there's a medical emergency. If you have money that you absolutely won't need for 6 months or a year, certificates of deposits can offer even higher interest rates. Right now, you can find CDs paying 4.5 to 5.5% for terms ranging from 6 months to 5 years. The catch is that your money is locked up for the CD term. If you need to withdraw early, you'll pay penalties that can wipe out your interest gains. But for money you're certain you won't need, CDs can be a great option. Let's say you're an experienced roofer who's built up a large emergency fund that you never touch. You could put $25,000 into a 1-year CD paying 5% and earn $1,250 in interest guaranteed. Building a CD ladder is another strategy that can give your bank account a boost. Let's say you put money into a new 12-month CD every quarter. That way, there's always a CD maturing within 3 months if you need the money, but you're earning top interest rates on money you don't need immediately. If you're a contractor or self-employed roofer, you should also look into high-yield business accounts. Business high-yield accounts often have higher minimum balance requirements, but they can pay competitive interest rates. More importantly, keeping business money separate from personal money is crucial for tax purposes in business accounting. You want your business savings earning interest too, not just your personal savings. Some banks offer high-yield business savings accounts paying 3 to 4%. If you keep $30,000 in business savings for equipment replacement or business emergencies, that's $900 to $1,200 per year in interest. $100,000 in a high-yield business account for off-season payroll and expenses would be earning over $4,000 per year in interest on money needed to keep liquid for business purposes. Not all high-yield accounts are created equal, and there are some traps you need to avoid. Let me tell you about the red flags that can cost you money. First, watch out for promotional rates that drop after a few months. Some banks offer really high rates to attract new customers, then drop the rate significantly after 6 months. Always check what the ongoing rate will be, not just the promotional rate. Second, be careful about minimum balance requirements and fees. Some high-yield accounts require $10,000 or $25,000 minimum balances. If you drop below the minimum, you might get hit with fees that wipe out your interest gains. Third, pay attention to transaction limits. Most savings accounts limit you to 6 withdrawals per month. If you need more flexibility, consider money market accounts or keeping some money in multiple accounts. Fourth, this should go without saying, but make sure the bank is FDIC insured. All the banks I mentioned are FDIC insured, which means your money is protected up to $250,000 per account. Never put your money in accounts that aren't FDIC insured. Here's where this strategy gets really powerful for seasonal workers. Compound interest over time. Every year, you're not just earning interest on your original savings. You're earning interest on your previous interest too. Let's say you're a disciplined saver who keeps an average of $50,000 in high-yield accounts, earning 4.5% interest. Year 1, you earn $2,250 in interest. Year 2, you're earning interest on $52,250. So you earn $2,351. Year 3, you're earning interest on $54,601, and so on. Over 10 years, you'd earn over $27,000 in interest that compounds on itself. That's $27,000 you earn for doing absolutely nothing except choosing the right bank accounts. Now, don't get me wrong, this isn't your investment strategy. It's a parking spot for money you need liquid. But over a 10 or 15-year period, that's enough money to buy a new truck, pay for a kid's college expenses, or add to a retirement fund. Here's exactly how to set up a high-yield banking system that maximizes your earnings as a seasonal worker. Step 1. Calculate how much money you typically keep in savings throughout the year. This includes your off-season fund, emergency fund, tax money, and any other savings. Step 2. Research current high-yield rates from the banks I mentioned. Rates change frequently, so check the most current offerings. Look for accounts with no minimum balance, no monthly fees, and competitive rates. Step 3. Open accounts at 2 to 3 different banks to diversify and take advantage of the best rates. Don't put all your money with one bank unless you're staying well under the $250,000 FDIC insurance limit. Step 4. Set up automatic transfers from your checking account to your high-yield savings accounts. Automate your savings so the money moves to high-yield accounts as soon as it hits your checking account. Step 5. Set up account alerts so you know when rates change or when your balance hits certain levels. Stay on top of your accounts without having to constantly check them manually. Since most high-yield accounts are with online banks, make sure you're comfortable with mobile banking. You'll be doing most of your banking through apps and websites rather than physical branches. The good news is that online banks often have better mobile apps than traditional banks because that's their primary customer interface. Features like mobile check deposit, instant transfers, and 24/7 customer support are standard. One important thing to keep in mind, interest income is taxable. If you earn $2,000 in interest during the year, you'll owe taxes on that $2,000 at your regular income tax rate. Uncle Sam always gets his cut. The banks will send you a 1099 INT form showing how much interest you earned, and you'll need to report it on your tax return. It's still worth earning the interest. You'll keep 65 to 75% of it after taxes, which is way better than earning nothing. Some seasonal workers like to keep a portion of their interest earnings in a separate account to pay the taxes on that income. If you earn $2,000 in interest, set aside $500 to $700 for taxes so you're not surprised at tax time. Let me share with you how seasonal workers can completely transform their financial situation by optimizing their bank accounts. Now, consider a roofing sales consultant who used to keep her $35,000 off-season fund in a checking account, earning basically nothing. After learning about high-yield accounts, she could move her money to accounts earning 4.3% interest. She would now earn about $1,500 per year in interest income. Over 5 years, that's $7,500 in extra money earned just by choosing better bank accounts. She could use that extra money to invest in real estate, which would generate even more passive income. Then there's the example of a contractor who could build a sophisticated banking system with multiple high-yield accounts. By keeping about $120,000 spread across different accounts for various business and personal purposes, he would earn over $5,000 per year in interest income from his optimized banking setup. That's enough money to cover a family's health insurance premiums for the entire year, funded entirely by smart banking choices. Here's exactly what you need to do to start earning maximum interest on your seasonal savings. First, add up all the money you currently keep in checking and low-yield savings accounts. This is your opportunity cost, money that could be earning 4% plus interest but isn't. Second, research current rates from the high-yield banks I mentioned. Rates change, so check the most recent offerings and compare features like minimum balances and fees. Third, open 1 to 2 high-yield savings accounts with different banks. Start with your largest savings balance first to maximize immediate impact. Fourth, set up automatic transfers to move money from your checking account to high-yield savings accounts as soon as deposits hit your account. Fifth, track your interest earnings monthly. Seeing the extra money you're earning will motivate you to optimize even more of your banking. Optimizing your bank accounts might seem like a small thing, but the long-term wealth impact is massive for seasonal workers who save large amounts of money. The difference between earning 0.01% and 4.5% on $50,000 is over $2,200 per year. Over 20 years, that's $44,000 in additional wealth just from choosing better bank accounts. But the real impact goes beyond just the interest you earn. When you're earning significant money from your savings, you're more motivated to save more. Success breeds success. I've seen seasonal workers increase their savings rates dramatically once they start seeing meaningful interest income. And increasing your savings rate is the precursor to making a solid investment plan. Making $200 plus per month in interest motivates people to save even more aggressively. Your bank account choice is one of the easiest ways to add thousands of dollars to your wealth over time. Roofers who save large amounts during busy seasons should be earning top interest rates on that money. The difference between traditional bank accounts and high-yield accounts can be $2,000, $3,000, or even $5,000 per year in additional income. That's money you earn for doing nothing except choosing better banks. Stop letting banks use your money for free. Every month you wait to optimize your accounts is money left on the table. Your savings should be working as hard as you do. If this video is going to make you hundreds or thousands of dollars per year in interest, make sure you're subscribed because we're covering every aspect of building wealth as a seasonal worker. I'll see you in the next video.